Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Jake Falcon, and he is the founder and CEO of Falcon Wealth Advisors. Welcome, Jake.
Gary, thanks for having me on your show.
Great. So, Jake, what got you into the financial wealth advising arena?
You know, Gary, when I went to college at the University of Texas, San Antonio, I originally went to school to be a golf pro at a pro shop at a country club.
Right.
And I worked at a country club, a nice one in college. And to me, from my perspective, the pros that worked there worked all the time. They didn't make a lot of money and they weren't very happy guys. So in college, I had a business degree. I was pursuing a business degree, and finance was my favorite subject. So soon after graduation, I basically walked into a random advisor's office and asked the gentleman, what do you do and do you like it? And from there, it's been my career in finance. So this is my 18th year. Particularly what I love about what I do is I love helping people. That's the number one reason I got into this industry. And two, the fact that markets, tax codes, as you know, financial planning strategies, all of that changes. And so the fact that I have a dynamic career that's always making sure that I'm staying on my toes and I'm able to help people, that's what gets me going every day.
Gotcha. What in going through, do you have a specialty that you do? Are there certain clients that you work with, certain things that that you really concentrate on?
I was playing golf this past weekend with another owner of a wealth management company, and we kind of laughed because he said that all of us that do what I do specialize in working with people with money. I mean, I know there's advisors that'll claim they specialize, but in the end, if somebody walks in my office with enough money, normally we're going to find a way to help them.
Sure.
We do work with high net worth individuals. Most of our clients are corporate executives. We also work with business owners or former business owners. And then this new sector that's emerging, they've coined our Henrys, or high earners, not rich yet individuals. So these are the 20, 30, 40 somethings that are making well into the six figures, some of them seven figures, and advising them. So it's a decent group. But again, I would say the corporate executives, high net worth, we have 800 clients in 35 states. So because of that, we've got a good variety of different types of clients. And I have 19 people on my team that all kind of have their own niche that they work within on the team. So
right. Now, do you find it different working with those corporate execs that have their corporate retirement versus business owners?
Yes, I like this question actually a lot. And so, yes, of course. I mean, they both have a different set of challenges and outlook on retirement. However, fundamentally, I actually think it's very similar. And first, retirement's got to come down to your purpose. And what are you aligned with? What do you want to wake up and do every day, and getting that straight? But I tell my clients that are business owners that they should save very similar to a person that is a corporate executive. So if they have a 401k or a simple or a SEP or a co-plan, whatever they're doing, if we can get them structure their retirement, that's one less thing a business owner has to worry about versus, as you know, all the other things that's going on with their unique challenges. So I like to treat business owners very similarly that I do corporate executives when it pertains to planning for retirement. And I'm a business owner, right? So I understand it, and I treat mine the same way. I'm making sure that I'm putting away enough so that if and when I decide to sell my business, if I decide to sell my business, that's not as heavy of a burden, if that makes sense, versus just saving.
Right. Now, how does that discussion go with with those business owners? Because many small business owners I know that I deal with, many of them are looking at, oh, well, when I sell my business, that is my retirement. So lots of times it is hard having that discussion with them of getting them to put away now.
I know it's just so risky. I mean, it's like they're putting all their eggs in one basket, right?
Mhm.
They're putting it. That's like if I told my clients to put all of their money in one stock, they
Right.
would look at me like I was crazy.
Yep.
And to me, that's what a business owner is doing when they do that. So we really heavily encourage them to set up something. If it's a simple IRA, if they're a small business, and make sure that they're maxing that out. And if anything, it's a good perk for their employees to have some sort of retirement vehicle as well. Now, yes, we love the exit strategy and we want to put that in there, but it's just my clients that have done a good job of saving independent of their business have a much smoother transition, I'm sure, as you know, than ones that are counting on a certain multiple or a certain dollar amount for them to be able to retire, because that's just going to make that transaction that much more stressful. And you're dealing with so much uncertainty and evaluations of the particular business. And so I really just try to coach them on saying, look, I know that you're going to have an exit strategy and hopefully you have this liquidity event, but let's get something down so that let's automate something going so that if that doesn't hit what we think it's going to hit, that you know you've got a backup or something else that will suffice if the exit strategy doesn't play out like we all hope it will.
Yeah, I think many times also the business owners think that their business is worth much, much higher numbers than reality. So lots of
Yes.
times you're having to coach them on okay, let's get back to reality and what you really are able to get for your business.
Oh, and I get it, right? My company is worth way more to me than it is to somebody else. I completely
Exactly.
understand that. And another point to that, Gary, is I like to recommend that people start getting valuations, independent third-party valuations done early, 10 years, 15 years, or whatever, away from this exit strategy, so that these independent third parties can tell you, hey, your company's only worth X, but if you did A, B, and C, you
Right.
will be able to get that much more. So then the business owner knows what they need to improve on. So do that early. Don't do that as you're approaching it. You need to do that as early. If you're a business owner and you're watching this show, I would encourage you to do it now. That way, at least you know where there's holes in your business so that you can
Right.
work towards that over the next decade or whatever, to shore that up a little bit. That's a good point. I think a lot of business owners think their company's worth way more than this. And I understand, totally
Right.
understand.
I think, to piggyback on what you're saying there, your existing CPA is not the right person, in my opinion, to give you that answer. You need to go out and find a valuation expert in this to get them to tell you that, because I'm going to tell you, again, I could tell you from a very loose, hey, this is what I think your business is worth, but somebody who's not doing those transactions day in and day out aren't going to know truly what the multiples are, because this is where it used to be doesn't mean that's where it is now. So I think it's important to make sure you find somebody that does these evaluations on a regular basis to be able to help you with that for sure.
Yeah, I agree. That's asking a lot from your CPA or even your wealth
Yes.
advisor, frankly. I think,
Yep.
again, there's companies that that's all they do, and they're in your market, and they can give you a much better idea of what's going on. I agree with you.
Right. What other mistakes do you see business owners making, when it's coming to the exit strategies, besides not really truly knowing their numbers?
Yeah, I think we've touched on the big one there is like, again, overvaluing their business, not diversifying sooner, right? So again, saving for retirement and looking at other opportunities. Like, let's say you own your business and you rent your office space. Maybe you could look at buying your office,
Sure.
your office building or something, right? So just having another asset there for retirement. So I think, again, just being too concentrated is probably the biggest risk that we see business owners make. And you want to either work with, your CPA or your wealth advisor to look at other ways to diversify, just so that you're not so caught up on that one transaction, really securing hopefully a 30-year retirement. You don't want all of that boiling down to one thing. And so, and then again, I go back to this a lot, but really understanding your purpose. Many, Gary, of my business owners, once we have their financial plan set up and they are independently saving for retirement and they know they are financially independent, they actually work longer than
Yeah.
they would have before because they're not so pressured for a transaction because frankly they don't need it. And so maybe they take a different role at their business where they still get to be the visionary or involved in some manner, but they're independent wealthy that they don't. Of course, I want them to sell it one day when they're ready, but they don't have to. And that's such a better position to be in versus needing to.
Yeah.
So
I think, with that being said, I think a lot of it has to do with also is that they get this person to do that valuation and be able to tell them, hey, this is how you're going to be able to sell for more. Then they find it's like, okay, well, when this happens, now I've either hired somebody or I've kind of let loose a little bit and let others in the company do stuff instead of me doing it all. So now I truly have a business and not a job. And that's what I think lots of times, especially with the small business owners, is that they own a job, not a business. So because of that, they're not there. But in your point, it's like, hey, now that they have this, they are working longer because they're finding, okay, I don't have to do this full time anymore. I have other people that can do this, and their profits actually grow exponentially, while they're still running things. So definitely makes a big difference there. And that ongoing investment makes a big difference too.
yes, I agree with you 100%. I read a lot of books about what you just said, and that's the whole. And not that everyone probably wants a franchise model like a
Right.
McDonald's per se, but what I've read and what I've bought into for me personally, and I like to coach my clients on is that as the business grows, you should think about who can I hire to offload something that either I'm not good at, doesn't give me energy, or doesn't move the needle and grow my business. And
Right.
the more you can hire and surround yourself with those people, like you said, the more opportunity you give your business to take off. And what I've realized now that I have 19 people on my team, a lot of the stuff that I used to do, I wasn't the best at, right? I did
Right.
it because that's where it was. But now that I've hired these technical professionals that is their passion to do that, and it's not my passion, they're doing such a better job of it and paying more attention to it than I was ever able to do when I was trying to do everything or most
Right.
everything. And so, yes, I think that's huge. And again, a lot of business owners, maybe they don't have dreams to be this huge enterprise, and I get that. But even if you're a small business, it's okay to hire two or three people around you so that again you can focus on what is the most impactful and again what gives you energy because you'll ultimately probably end up getting to do what you do longer and it'll be fun for you.
Right. I think lots of times the things that business owners make the mistake of also is that they're not building a team. And you need that internal team for sure to help you run your business, but you also need that external team. You talked about how the business owners talking with their wealth advisor or talking to their CPA. Well, I look at it really that they need to be talking in conjunction with their wealth advisor, their CPA, their business coach if they have one, their attorneys, and let all of that team talk also to be able to get them to where they want to be and not wait until they're ready to exit to then finally start having that conversation.
Yes, it's a huge problem actually. So especially if you're a business owner and you've had uber success in your field or your industry, don't let overconfidence sway you. So
Yeah.
just because you're really good at making widgets or whatever doesn't mean you know the nuance of tax or wealth management, right? And so I see that though, that overconfidence, or even worse is that if you have peers in your industry and you hear, oh, they did this and were able to write all of this, and then they don't even run it by you, Gary. Like
Right.
that is so dangerous that again, you're right, internal team, external team, team of professionals that this is, I do wealth management. That's what I do. You do taxes. And so
Yeah.
build up that team of professionals that are all here to support you and guide you. Instead of having that overconfidence and think you can do it alone or ignoring it, or again, I think this is really dangerous. Doing what your brother, sister's dog did because it
Right.
made sense for them doesn't mean it's going to make sense for you.
Yeah, I totally agree with that because and so many times you hear that it's I hear it from my side. It's like, hey, yeah, my next door neighbor told me that they've been writing this off for blah blah blah, and it's like, okay, well, they have a different type of business than you have. That's not something you can write off. There's other things that we can do, and I find it interesting that many times, they're tripping over dollars to pick up dimes. And it's just like, there's so much more that we can do and not have that risk of anything being questioned. I'm sure you deal with this all the time. It's like, oh, my next door neighbor told me I should invest in whatever the next, crazy stock is type thing. How do you combat that?
Yeah, that's a good one, Gary. It's all goes down to the psychology of money and the way people interpret things. So when that type of thing comes up, whether it's a hot stock, like you said, or I've had clients again tripping over pennies or tripping over dollars to pick up pennies. And I try to get to the core, like why I try to ask in a friendly way, like, why is that important to you? Or why do you think
Right.
that's going to help your plan? Because I always what's good about our practice is that we always we build out these financial plans, and that really guides a lot of our advice and our decisions. Now, what's great is the plans can change, but I'll also throw that out and it's like, okay, well, if we do this, we have to recognize it's going to change the plan or your risk profile or whatever. Are you comfortable with reworking your whole plan? Is that what you want to do over this? Right. And I just try to boil it down and get to some perspective and try to really get to that core issue of why is that so important to you? And it's fascinating. And it goes into why some people are liberal or some people conservative. I think just all of us have our own biases or the way that we were raised and our own relationship with taxes and money and business. And I've got to flesh that out to see where they're coming from before I start kind of rolling out some of the facts and the impacts. And then again, what's great with our planning software is we can show them, it's like, okay, well, if you do this and this happens, this is what your plan will look like. And if you do this and that happens, so we can show them these different scenarios. And oftentimes, as it particularly comes to the investments, it doesn't change it enough to warrant the extra exposure or the risk.
Right.
Or, we do tax planning, and I'm glad to hear that you do as well, is that we'll say, well, no, if you do this Roth conversion, that's going to be such a bigger impact to your plan, even though you've got to pay higher taxes today, or your Medicare goes into IRMA and these other things start applying, we can show that. And I think it's all about education, right? And I think that's one of the reasons you have your show is educating people. But first, you got to dig out that bias and that psychology, what's going on in there, and let them be a little bit of aware of where they're coming from, and then go in to the scenarios. But it's not easy. It's humans, and it's one of the challenges of our jobs, and it's something that I enjoy doing.
Right.
But that doesn't mean it's easy.
Yeah. I've had, clients in the past that are very, very good at what they do, made a lot of money doing what they do, but they've been trying to do day trading. And it's just like the amount of losses that they have, they're never going to be able to use them in their lifetime because they're trying to they want to chase after that next whatever Apple or Bitcoin or whatever it is that they're trying to do. And it's gotten to the point where, this has really, handcuffed them. And now they're having to work longer because they did lose so much money. Um,
I hate to hear that. And
yeah,
the best way for that is we've set up like small, very small accounts. Let the client get burned on their own so they can feel the pain. And I hate to hear that. That sounds way more significant,
oh yeah,
but you're right. It's a big problem. It's overconfidence. They think they're good at whatever, like commercial real estate or making pies. That
right,
doesn't mean you're good at investing or the stock market, or you can predict the future, because nobody can do that, frankly.
right,
So yeah, it's terrible. Terrible to see that or hear
yeah.
about it.
What, with, obviously we have tax laws that are, sunsetting at the end of 2025 as of right now. So, you talked about the getting people to convert, to a Roth, which is, been preaching that for a while because we're in a historic low tax rates. Tax rates have never been this low, even though everybody's talking about how bad taxes are. Rates right now are historic low. What are you guys helping clients, or how are you guys helping clients plan going forward, with this pending change? And as state, tax limits supposed to be changing also.
Yeah, and that's good. And you're right on that, though. I want to point out that it's funny to me how you're right. Tax rates are at historic lows, but people still feel like they pay way too much. It's like, well, it could be a lot worse,
Oh, yeah.
right? And so the problem though that we're dealing with Washington is, as you know, is that yes, they are set to expire, but that doesn't mean that they're not going to change all the rules on
Right.
us in 3 years or whatever. So we are cautiously planning. So we're very mindful of the brackets, even though we know it's a ladder effect. So it's not like an all or none situation, but
Right.
we're just continue to do the tax planning. And for us, the critical component is that we do it every year. And the idea is that we are making the most informed decision based on the information and the rules that we know today. And we really try to set that expectation with our clients saying, hey, this is what we know today, but we also know that that is subject to change.
Hmm.
So based on what we know, we think this is a good strategy, but we're not a rip the band-aid type of practice where if somebody has $2 million in their IRA, we're not recommending they convert
Yeah.
all of that now, right? And so, because again, we just know that it could all change. And so
Sure.
we're strategic, and our key is just doing it every year. We just got to go through it every year. We got to say, all right, this is what's going on. These are the current brackets. This is your current plan. What can we do to help optimize it for today? And we move forward. But I think the key is having that relationship with the CPA, letting them sign off on any tax planning strategies that are out there, and then just meeting regularly with your advisors is the most important thing. Don't put it on the back burner. It's like anything else. Like I get it. We get busy in our lives and we have families and we have vacations and we've got businesses, but this is so important. You can't afford to just forget this and just push it under the rug because we're talking about thousands, in some situations, millions of dollars that
Right.
just a little bit of planning work can help.
Yeah. I think, especially now, we, going through the pandemic, if not anything, taught people that we don't have to necessarily be in the same room, in the same city, the same state, even for people to work together. And it's like, talking about having these meetings, it's just like, okay, you know, you don't have to take off a half a day of work anymore to go do this. You can certainly, over lunch or whatever, you can do that half hour, 45-minute meeting, to get caught up to make sure everybody's on the same page. How, recommendation wise, what do you feel is and I know it's going to vary from client to client, but how often do you guys try to meet with your clients?
Yeah, and again, it depends on the complexity, right? So
Mm.
a client that's kind of more on cruise control, like they don't have a lot going on, they're retired maybe, everything's all already been strategized. For them, we're checking in, once or twice a year. For clients where it is more involved, we like to check in literally 4 times a year. And on
Mhm.
top of that, do tax planning typically twice a year. Once in the middle of the year, where we'll look at their prior year's tax return, run an analysis. And then once in the fourth quarter, we say, okay, we know what you did last year. Let's look at any realized gains or losses this year and any income and see if there's opportunity to do tax planning. So I'd say on a very simple situation, it might be 1 or 2 times a year. On somebody that's got more going on, it's 4 to 6 times a year. But again, what's great about our clients is that we are proactive in that outreach, and they also know they can come in and work with us. I'm a wealth advisor. I've got a business partner as a wealth advisor, but then we have got a great group of financial planners who have availability to get in the weeds, to have some of these conversations with our clients, to take time to go over it with them. So it's
Okay.
important that we have a team around us. I
Yeah.
think advisors that try to do it on their own, it doesn't make any sense. Like and again, this is my opinion, but a firm or a practice that has a team approach, an ensemble approach, run circles around those solo advisors because you can't be there for everybody. Unless you have 20 clients or 50 clients, you can't be there for everybody.
Yeah. I mean, even with those numbers, it's still going to be difficult because
Yes.
you're trying to really, you know, meet the expectations of your existing clients, do all the planning, do, the tax planning, and that doesn't even include the meetings.
Right.
It's awful hard to do any of that stuff. And I know, I mean, when I first started out, it was just me, and then, have grown. And I'm sure you did the same thing, so it is one of those things that, as you're trying to find the right wealth manager for you, you need to look and find, okay, do they have the support team to be able to do everything? Do they have that back office help that, can help them, getting documents and getting stuff out to you, and just somebody that's there to be able to pick up the phone to talk to you when I think lots of this stuff that we do and you do the same thing is psychology. It's talking people off of a cliff. I mean, lots of times that's what we end up doing.
You're right. And especially now with social media and how things just get queued up in our feeds over and over. It's this echo chamber, self-reinforcing loop. Whoa, 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 let's tap the brakes. Let's talk to my advisor or my CPA. Let me run whatever I'm thinking by them and get some facts, right? And
Right.
get some clarity. I think that helps my clients the most. I get that comment a lot. It's like, I'm so glad I talked to you because my brain was going all over the place and I just needed to talk to somebody about it and see the data and look at the numbers. So yeah, you're right.
Yeah. Yeah. So, as you guys are listening to this, I mean, if you don't feel this way with whoever your professional advisors are, I think it's time for you to look elsewhere for somebody that you do feel comfortable with and that you can pick up the phone and talk to them. Not that we're going to be necessarily available same day, but you should be able to get in relatively quickly to be able to get some of this stuff off your chest to make sure that you are comfortable in what you're doing and you have a plan. I mean, to me, that's the biggest thing. Have the plan and then implement the plan.
Right, right. And Gary, yeah, responsiveness I think is so important in this day and age. I don't know why so many professionals aren't responsive to their clients. I mean, these are the people paying their
Yes.
salaries. That's one of the biggest complaints I get from new clients when they come in. They said, I just never would hear back from my advisor. So we actually started a fun, basically commitment to our clients that if they email, this is an email, if they email our service group and they don't get a reply within 24-hour, like the next business day, basically. So if they email on a Saturday, they'll hear back by Monday. If that doesn't happen, we will take them to lunch as an apology because we want to own that commitment that
Right.
like we understand our clients are busy lives. And the fact is there's 19 of us. If enough people see that, certainly somebody can reply. And I think people just want to be heard. They just want to say, look, I might not have the answer in one day, but I've got your question. I understand it. I'm working on it. I'll get back to you in 2 days by 4 o'clock
Right.
or whatever it is. But that commitment by our team, I think, is what our clients value. Is that let's say, hey, we actually care about you. We understand we are working for you, and we're going to do our best to be responsive.
Yeah. I think that's something that's very important. And then from the flip side of that is understanding that, because I just had this morning, I had somebody that sent me an email on Saturday, and at 8:30 this morning they were calling and they were like, well, why haven't you responded yet? It's like, because you sent it to me on a Saturday and you haven't even let me, get into the working day yet. And sometimes, we have to kind of reset that with our clients and just let them know it's like, hey, expectations, it's like, you got to give me, at least a business day to respond to you. But I think you guys in putting that out front and then saying, hey, if we don't do this, this is what we're going to do to make it up to you, I think helps set the table, for the clients to understand, hey, this is how this is going to work.
Right, right. Yeah, because that's tough. I get it, Gary.
Yeah.
So like, yeah, it's a tough one for you. It's it's Monday morning. It's like give me. I have a weekend too. I have a family, right? I
Right,
have a
right,
life,
right,
and I got to get into my flow. But
right.
yeah, so we help. I think that's actually, believe it or not, that's helped our relationship with our clients
I
because now
bet.
they, like you said, they know the expectation.
Right. So Jake, we covered a bunch of stuff. What have I not asked you you wish I had?
Well, just one big thing, and hopefully it's come through in today's show, Gary, is that I'm really big on financial literacy. I do have a book out there called Retiring Right, Smart Steps for Exiting Corporate America. I'm really passionate about it. It's 150 pages of basically 18 years and thousands of meetings with clients. And I just try to boil it down. And I think we talked about this before we started airing, is that I just want to get people to start thinking about retirement. This 150 pages isn't going to have all the answers for you,
Right.
but it'll get that conversation and that wheel spinning. And then I also have a show also called Upticks, which is a podcast. It's on YouTube, Apple, iTunes, and Spotify, where me and my business partner, Corey Bittner, we talk about the latest trends in financial planning and investments, typically news articles that are surfacing and coming up. So that's a big deal. again, financial literacy is very important to me and educating people. And so, yeah, that's probably the big one. And then again, just, business owners that it's awesome hearing those stories. I'm sure you love hearing about all your clients' stories on the types of businesses and what they do. But again, don't let your accounting and your wealth management go by the wayside. I get it that you're working 50, 60, 70 hours a week, but this is too important. You don't want to work so hard to give it away on the back end, either in higher taxes than you need to pay or just poor planning. And so take the time. And you're right, Zoom is easy, but I would argue take a day off, take a half day to go meet with your professionals. It's that important. And you're going to feel that much better about your situation after you meet with because you'll know where you stand. Right. I think that's what most business owners want to know. They want to know where they stand. And that's one way to do it.
Right. So Jake, where can people get your book?
Yeah, so it's out there on Amazon. It's probably the easiest way, right? So literally just, you can search in Amazon, Retiring Right. Very Fortunate is already a #1 bestseller, so it's out there. There's an ebook, hardback, and paperback. Haven't done the audio version yet, Gary, but hopefully I can get that out there soon. But it's out there on Amazon. It's probably the easiest way to find it.
Great. So Jake, if people like what they've heard and they want to be able to talk to you or someone in your team, how can they reach out to you guys?
Yes, thank you. Yeah, so simply you can email me directly at jake@falconwealthadvisors.com. That is also our website, falconwealthadvisors.com. We've got a lot more information about us. And we do have a signature planning process that we take individuals through. It's complimentary, it's confidential, but we'll take you through the first few steps of our planning process so you can get a feel of what we do and how we interact with our clients. We can give you, probably most importantly, some initial observations on your situation. And then we'll go over the costs if you want to engage in our services. And again, I love meeting with new people. That's how I grew the business. And so please feel free to take us up on it. And thank you, Gary, for the kind words.
Great. I appreciate your time today. Everybody, this was Jake Falcon, and he is the founder and CEO of Falcon Wealth Advisors. And I'll see you guys next week.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.